Let's start. Check voice once, please. Check, is it audible? Check once. Is it audible? At last. Hmm? आपको क्या पता? I'm asking, is it audible or not? मतलब मैं वैसे पूछ रहा हूँ नालायक. Mic is not working. Which month is this? Speakers are working, नालायक. Now check. That's fine. Yes, that's fine. Good. We'll start now. Yes. We'll start with whatever you want to call it as marathon revision, recap, etc. I'll just take 2-3 minutes before we come to on. We'll just take care of few things which you can expect from me in the coming days. I'll plan to do revision of all batches, all topics means. Starting with today, I'll be slightly slower, maybe the easiest or one of the easier topics mutual funds I'll take up. Objective would be you would be given with the answers also, with the questions also, 90%. But I'll not ask you to look at the answer till the time I tell you. Do not look at the answers. We'll try to solve it. We'll make the flow. This is exactly the way I expect when you revise at home. How do you revise at home? And since we have a gap of, let's suppose today we have done some chapter, when you go back home today, revise that chapter thoroughly so that your chapter is freezed. Because marks wise, it could be possibility that you might be assuming forex is important. Forex I'll be covering in detail. Maybe I have framed, I think, more than 20, 25, 30 questions, and I've taken all varieties in that. M&A business valuation, again a heavyweight chapter I'll take up. So mutual fund is something which I'll take up in such a way it gets a flow. Plus we have a question coming from 5 to 8 marks approximately, that accordingly you can build up your framework. Whether it's a security valuation, bond valuation, M&A, business valuation, forex derivatives. By the time we come to the forex, you'll be comfortable with the speed, etc. And objective yours should be whatever you've done here, from wherever you have done the classes, etc. Go back, revise everything. Since you are coming here, any doubt comes in, we can take up at any point of a time. That's the objective. Because this is not the time, although I'll try my level best to discuss with you the framework of chapter, maybe slightly faster, because we do not have a liberty of a time. And today we are starting at around this time, 6 o'clock. Tomorrow onwards we'll start slightly earlier. Maybe it's a weekday, we'll start around 5:30, because some of you come from the office at 5:15, and we'll cover up maximum portion on the Saturday, Sunday. We have that privilege. And also the markets are on, so it becomes difficult for me to also come at around 3 o'clock, 3:30, because 3:30 market gets over. By the time I get over with the workings, 4:30 it becomes. And you also have done your office work. But objective is very clear. My objective is just to give you a flow. That flow would be there. Your objective is make sure that whatever you do, your calculators should work. You should be carrying a decent size of a calculator which you expect to use in the exam. That is the objective. In between, if something comes up, I'll keep telling you. uh, Notes they'll provide you shortly, don't worry. Anyhow, those are watching the live at home, they will have the notes in the link this video. I have created a folder in which you'll have a class notes, you'll have a handouts. Those who are coming here, they'll give you the hard copies. If anything they expect from you, that their call and your call. If you want that I can go with the link, that link would be there. Any kind of a notes which I'll give you, I'll discuss, that will be there with you. And since I'll be starting with the mutual fund, few more things. I have this, for example, question number 6. Now this is actually I've picked up from my main book, so I've kept the question number same. Those who have already studied or those who are revising, for them it becomes easier. You will not have a challenge. Accordingly, for example, we have a question number 6 here. When I go to the solution sheet, I'll tell you how to read. I'll have the solutions also accordingly. Let's say solution 30, or it's a solution number 28. So we have accordingly, I'll provide you those solutions also. You will not have any problem, but make sure till the time I tell you, do not look at the solution. Let's get in the flow. Assumption is if you know something, it's perfectly fine. Otherwise, especially chapter called Forex. I have my own way of doing it, so I'll know accordingly that what kind of a speed we are in, how adaptable you are. So I have my own way of doing that chapter, in which I'll take slightly bit longer maybe. So you'll not face any kind of a problem. You can solve any kind of a question. Starting with the mutual fund, I'll just come to, do not worry. If you have a handout, it's fine. If you do not have, still not to worry. Mutual fund is one of the easiest chapter we have in the course. It is from the full time, so I'll just discuss briefly. Mutual fund has a link with the portfolio. There could be a possibility, some questions when you go back home, you might find in the chapter called portfolio. So I'll tell you in portfolio, we'll cover that up because there would be some questions on the portfolio rebalancing or relation with the correlation. That's not a particularly mutual fund chapter. Mutual fund, if I speak about very frankly, two type of questions we asked in the exam, which revolves around is one from the perspective of the mutual fund and one perspective of the investor. When they are calculating or doing some calculation from the mutual fund perspective, they'll ask you NAV calculation. The way we have a share price, that's called net asset value. Share price is the company's shares are listed. If mutual funds are listed, it's okay. If they're not listed, they have to calculate the NAV, because if I buy sell some units, then I should know what price I'll buy and sell. So one question would be from the mutual fund. That's one part of the chapter. Second part is from the investor. In the last couple of years, institute has become smarter. They have started giving reverse calculation questions. In fact, one more thing, whichever questions are in the notes, it's okay. If I feel there is some question which requires a special attention because of the ambiguity in the answer, I'll cover up separately. For example, in this, there is a question which has come 6-7 times in exam. I don't know whether I've taken in the notes or not, because it's a straightforward question. Should we calculate the answer in number of days, or should we calculate the answer in months, etc.? That I'll take care in every chapter wherever there is an ambiguity. But I do not want to disturb any chapter. Objective at this point of a time when you're sitting, I'm not expecting that you will become expert of the practical side. Objective is when you go the exam, you have a confidence that you can write the paper. That's the objective. I'm simply keeping that objective in mind. Mutual fund is an industry which will collect money from this is just a base work so that you are adaptable. What is, they collect money from the similar like-minded people, and since it has become very very important part of Indian growth story now, in time period when you're sitting, and in another 1 year you cannot even imagine how the mutual fund industry will evolve in India. The way the markets are behaving, it's all because of the mutual fund. These are the people who are investing money. Like-minded people invest the money, mutual fund buys. Only thing you can give is the sector specific indication, whether you have to invest in the auto sector, whether you have to invest in the telecom sector, etc. They'll generate two type of return. Practically, we have a slight difference from the your exam point of view. Mutual fund, when they are investing in the market from here, it's as good as I'm a mutual fund industry. I've invested in the market. I'll generate two type of income. If I remain invested, I'm getting a dividend income. If I buy something, sell something, I generate a capital gain. Now, when I generate, it's as per the SEBI guidelines, I have to return back those to you. When I have to return back those things to you, they'll return back as per the SEBI guidelines. Yes, after taking care of their expenses and the commissions in the form of dividend and capital gain. That means investor also generates two type of income from the mutual fund as per the theoretical world. We have a dividend and the capital gain which comes out. It's an indirect way of investing in the market. Mutual fund returns the return to the investor. The circle revolves as investor gives a money to the mutual fund will invest in the market will give return, and return back to the investor. These are actually a printout of a board. So the way of reading this printouts would be left to right. For example, when you're reading a question, it will be this way. So it's a print of board, because when we write on the board, I write from right to left and the print of the board has been taken. So when you're reading, by today's class, you'll be comfortable how to read from the slides. This is actually a formation of a mutual fund. When we talk about formation of a mutual fund, might not be so very important from the perspective if I speak about the examination point of view, but theory they can ask you that a portfolio manager, actually a portfolio manager runs the show. That means he is the person who will run the show, and sponsor is a person like you have a promoters, etc. They make it, and mutual fund is a body which takes care independently, which is registered under trust. That's just a part of the formation. Which first variety of a question which comes practical side in the exam is NAV calculation. We have net assets value. Also, you should know when you're doing some numbers in whose hand you are doing it. NAV calculation we are doing in the hands of a mutual fund. Return calculation I'll be doing in the hands of the investor. So when you're looking at this kind of a scenario, you should be very comfortable that what point I'm standing, so that it becomes easier for you to calculate the answer. NAV calculation, actually I have not taken one slide in which I should have taken. If you make a balance sheet of a company, you find here share capital, you find here something called reserves, then there are creditors liability, and there are some assets. Exactly same way you can make roughly more or less mutual fund, but in the case of a mutual fund, you'll have assets. Assets would be investments. Instead of furniture, machinery, etc., they'll have investments. These investments are revalued every day. Technically, now the market have become so matured in India. By 3:30 market closes, and I think earlier also they were supposed to give the NAV by 7:30 in the evening. By 7:38, you'll come to know that depending on today's market closing, whatever assets they are holding the mutual fund, what is the market value of that, and they'll reflect the NAV. So the NAV calculation is done. NAV calculation is nothing but it's a total assets value minus the outside liabilities. Outside liabilities could be few things which are outstanding in nature and which has to be related with these mutual funds only. So it's a total assets minus outside liability divided by number of units. If nothing is said in the question, assets would be taken, or if market values are given, assets would be calculated on the market value. If market value is not available, then you have to take the book value. And outside liabilities, generally you have these two, although practically there could be very few circumstances in which amount payable on shares will stand, because nowadays it has become T+1 system. Today you buy, and by today itself you have to make the payment, and actually upfront payments have to be done. So things have changed, but theoretically they'll give you more or less same. First question which I'll pick up is very basic, which has come 5 times in the exam. It's not tough, it's only from the repetitions point of view which has come in the exam. And I want your calculators on, please, only the calculators. It's a question number 14. You can look at the screen only. We'll do the working here. I'll show you the presentation answer then. So question number 14, we have page 1.1. This question has come, I think, more or less 5 to 7 times in the exam in different forms, and approximately 8 marks weightage. Just I need your calculator skills. That's it. Nothing else. Based on the following information, determine the NAV of a regular income scheme on per unit basis. Listed shares at cost 20, cash in hand 1.23, bonds debenture at cost 4.3. Of these bonds not listed and quoted, unquoted. That means they're not listed in the market. Other fixed interest securities 4.5. Dividend accrued. This dividend accrued is what mutual fund has to receive from the company. Amount payable on share is a liability for the company. Expenditure accrued is a liability. Number of units 20 lakh. First area of a mistake is amounts are in crore, shares are in 20 lakh. This is the gray area. When they calculate NAV per unit, they simply divide by the amount by 20. It will not be 20. Either you convert 20 lakh into crore or crore into lakh. So lakhs have 5 zeros, crores will have 7 zero. Either it will be point divided by 0.2, or you convert in the lakhs. Actually, this part is very weird, but since it comes in the exam, I cannot help it out. He says the listed shares, he is talking about the first category, listed shares, were purchased when the index was 1000. That means index is nothing but Nifty or Sensex, you can imagine. It's 1000, and now the present index is 2300. It means when you invested a 20 crore investment, that time the item was 1000. That means you can imagine a property I purchased, a 5000 square feet property I purchased, the area was 1000 square feet, please. Now the area has become 3000 rupees square feet. So automatically you know that how to calculate the value. 1000 rupees has become 3000. Similarly, 1000 rupees has become 2300. So my 20 crore value will become what? 20 into 2300 divided by 1000. You can tell me the value which comes out. 46. Value of listed bonds and debentures. Listed bonds and debentures. Now we can do one thing. Out of these there are some bonds and listed. So let us put the value for that. It's 8 crores. It's 8 crores. Sir, how many listed? Only 3.3 were listed. But anyhow, one is given separately. I'll write the value separately. So out of this, some value which now appears in the market is 8 crores. There has been diminution of 20% on the unlisted bonds and debentures. Unlisted bonds are not listed. So into point 0.8, I'm expecting you to do the mathematics, please. Into point 0.8 or 80 percentage, it's 0.80. Other fixed interest securities are at cost, even if it does not say anything, still we'll assume at a cost. Other fixed interest securities are 4.5. Cash is the asset in which no change in the value would come unless and until few adjustment he tells you. There will be no adjustment in the cash. Cash will remain as it is 1.23. Basically, objective is if market value is given, take the market value. If market value is not given, take the book value. The dividend accrued will remain as it is. 1, 2, 3. Tell me the assets value total. 61.33. 61.33. This is not the format, this rough work I am doing. Amount payable, these two are liabilities. How much do we get? 7.07. Difference of these two? 54.26 crore is my value. So NAV per unit would be 54.26 crore divided by 0.20. Sir, why 0.20? 20 lakhs will become 0.20 crores. How much do we get? 271.71.3. Some of you might like that's its childish way. I am still saying I'll show in the next question itself we'll make a mistake. Don't worry, I'll not go beyond. This was just a warm-up exercise because this question has come n number of times, so I've taken it up. The area of a mistake. Now the presentation, how I expect to do, since it comes for 8 marks. The presentation would be no need to write any answer, please. It's only in the rough I'll expect you to write the answer. The way of presentation would be it's on slide 4. Once you get the handout or when you see that differences, that was 14, no? Yes. It's calculation of NAV. We have a particulars. Way of reading is particulars, basis amount, assets market value 46, cash in hand book value 1.23, listed bond debenture market value, unlisted also has a market value because it is not necessary that only listed will have a market value. That was 80 percentage 0.8. Other fixed interest securities book value, dividend accrued book value, the total asset came 61.33. Then liabilities. The way of reading this slide is left to right, left to right, right to left. How are you? Yes. Right to left. Feeling, you understand bhavna, na? Haan, bhavna. Bhavna is feelings. No other bhavna. Which side? Right to left. Very good. Liabilities you have. Total liabilities come this, and that comes the asset value. Next question I am showing you. I need exactly same way calculation and put some pressure on yourself, especially in the simpler chapters. Do not worry and please do not get underconfident that if you are not able to solve. If by chance you make a mistake, it's a 99% guarantee. In exam also same mistake will be made. In 2.5 minutes, just solve it. Note it, don't take photocopy, you'll get everything. From everything you'll get, this also I'll give you. You just have to be alert, present, that's it. With the calculator. I don't expect anything from you. Maybe a small register or any one of you carry and then what you did, tear apart, give it to him 1 page, tear apart, give it. Friendly relationship you make now, right? Second question, 26th. If you want, I can read out. I'll expect your numbers. I'll just copy down those numbers from you. Just I'll read out with you. Look up, please. Exactly same, slight different. And also I'll highlight the difference which is in the two questions which comes out. It says, based on the following data, estimate the NAV on a per unit basis. Regular scheme of mutual fund, rupees in lakh. Equity share, cash in hand, debentures of this bond not listed. Other fixed interest securities, dividend accrued, amount payable, expenditure accrued. Exactly same till here, no change. First change which comes out. He says current realizable value of fixed income securities of face value 100 is 96.5. How does the value of the bond changes? We have an entire bond chapter, so don't worry. It basically shows 100 rupees becomes 96.5. So you can accordingly calculate the value here. That's one part. Number of units 2,75,000. All listed shares were purchased at a time when the market portfolio was 12,500 and now the market portfolio is 19,975. There have been diminution of 15% in unlisted bond, and listed bond debentures carry market value. These are all same. New line which is in this question is this part. Operating expenses paid during the year. That's new part. Now I leave it to your judgment. They paid some expenses during the year and there is some cash balance given. What has to be done? I just need is take 2.5 minute time, do your working and tell me the numbers. Answer is given to you on this cross check. What I expect from you is 1, 2, what value should I put in front of him? That's it. Quickly check it out, please. And don't worry on wrong, right, anything, please. Everything is acceptable till the time you make a mistake in the main match. It's a revision pitch. Do anything what's your choice. And instead of looking all data, objective is write one by one values. A 12,500 item becomes 19,975. So my 40 lakhs will become something. How much? 63.92. Cash I'm leaving for the time being. Bonds and debenture. Sir, how did we get 63.92? It was 40 divided by 12,500 into 19,975. 8.96 I have, and 100 rupees was with respect to 8.96. 96.5 would be how much? Basically 100 rupee. No, sorry. Which item he's saying? Sorry. This one. Sorry. 9.75 na? Fixed interest securities. 100 rupees becomes 96.5. 9.75 will become what? Approximately 9.4087. You can put in 3 decimal, 2 decimal, depending on your circumstances. Since are in lakhs, you can even put in 4. Of the late institute has started mentioning about the decimals. In case nothing mentions, perfectly fine. Lakh amount has to be at least 2 up to 3 or 4. You can go. And 8.96 also he said something. Listed bonds will have 7. This is 7.5. 2.5 of these bonds not listed. How much diminishing? 15. We can multiply into 85%. How much? 2.125. Dividend accrued will come 1.95 as it is. Anything else left? No. Cash. My only objective was, he said operating expenses paid during the year. Should I subtract from 2.76 or take 2.76 as it is? Actually, this is a problem of the language of the question only. Advice to you is, when these kind of question comes in exam, I'll show you the next question. Look at the language of the next question. Whenever he says a kind of a question, we started on 1/4/2012 and then he ends the question on 30/4/2012. It means during the period, whatever events would have taken place, cash in, cash outflow, etc., you will adjust accordingly. This type of a question, when it comes, we do not even know whether the cash was adjusted or not. It's inbuilt assumption this cash is a closing cash balance. It's inbuilt assumption, please. I'm saying it again. If you look at, when you go back home, you can open up the books. In books, you'll find n number of questions on this front. You'll find wherever he would have mentioned the opening and the closing date, the cash adjustments are done. whenever he has not mentioned the opening closing, it's a inbuilt assumption to some extent that these are nothing but a closing cash balance. So this was just a information line. It means this cash already has been adjusted. So we'll take balance as 2.76. If someone would have done the classes, they can refer back. I think in the main class I uh, redo this question along with the question number 11 also. Anything which has opening balance, closing, we'll see in the next question, don't worry. We adjust for it, otherwise we'll not do any adjustment. It's an inbuilt assumption which is there. This will give me total the cash. So it was just an information line because expenses are paid. I don't know whether the this balance was a opening or a closing. I'm assuming this was a closing balance, which has been a standard assumption. How much do we get total here? 87.665. The liabilities total 15 point. How much do 72.36. These are in lakhs. This is very important, please. And units are 2 lakh 75. So this divide by 2.26.31. I'll just show you the answer. Cross check your numbers. So question number 26. Next slide I have. Quickly look at the answer, please. Cross check. It was in NAV calculation. Amount in rupees crore. You have particulars amount. Listed share cash in hand. Listed bonds and debentures, unlisted bonds and debentures, other fixed interest securities, basis, and accordingly market value. Market value. This was a book value. A part total assets. Liabilities we get amount payable on share, total liabilities, A minus B, and NAV per unit 26.31. Third question, which variety came? Actually, that question used to come in 2010, 12, somewhere in the FR paper. At that time, I think mutual fund was there in the FR also. Now it is not there. And that question has a link of this part. Second part is investor hand. My entire working, again I'm saying, will revolve around two parts. What we are doing is calculation as of now mutual fund. Now I'll move to the investor front. Investor is, I am standing here. If investor is investing something, then what is the return he is getting? Before I read the next question, let me do a small working with you. And whenever you're creating a formula in these revision classes also, I'll try that formulas you are not remembering, you're creating by logical way. We'll try our level best. Now the computation of return, if you look at this slide, no need to copy anything. It's slide number 7 I am on. How do you just try to create from a normal layman's language? We say if 0 period he invested 10 rupees during the year, mutual fund distributed 40 paisa to him, mutual fund gave 20 paisa to him, and closing value comes 11. I'm a layman perspective. I'm asking, you gave me 10 rupees, I gave you 40 paisa as a way of a distribution as a dividend, I gave you 20 paisa in the form of a capital gain distribution, and at the end your value became 11. You have not sold. So 10 becoming 11 is your unrealized value because gain has come, and 60 paisa you have realized. If someone is asking what is the return which you are getting, the return, how would you calculate from a normal layman's perspective? Try to create a formula. It's a closing value minus opening value plus any kind of return which I get. Let's suppose I would have invested in property. Property is easier for you to understand. If I buy a property 50 lakh, the value of the property becomes 70 lakh. I always tell the value has appreciated. I have not sold. During the year, I have also received a rental income. So I can calculate my return. Similarly, I'll say I invested 10 rupees, the value becomes 11. So my return becomes this closing value minus opening value plus dividend distribution and a capital gain distribution divided by the opening value. Formula for return becomes as a dividend distribution plus capital gain plus NAV1 minus NAV0 divided by NAV0 into 100. This becomes a formula. It's nothing but it's a, if I would have spoken from the price angle of a share, I would have said closing price P1 minus P0 plus the dividend divided by the P0 which comes out. This formula is only valid when opening and closing units are same. If opening closing are not same, we'll move shortly from it. That question also has come 7-8 times in the exam in different forms. So this is only when it is there. This by chance I have not given you fifth question in the book, so don't worry. It's main book I have covered, so nothing to worry on that. We'll cover it up. I've taken small number here only. That's 10 rupees becomes 11, 40 paisa, 20 paisa it comes out. 40 plus 20, closing value 11 minus 10 by 10, it's 16% return comes. Now I expect from you a calculation skills here. In a single minute, read 27th question. Then I'll ask you some figures and we'll do it verbally and then show you the answer. 27th question. These all are 8 to 10 marks question and repeated twice, thrice in the exam. Just read out once, no numbers to be done. Numbers I'll discuss with you. Read out once, single minute time. Whatever copies you have, just share one each. If you have a lesser number, they'll share one each at the by the time the class ends and collect from them. Every desk should have at least one copy. I'll read out the question with you. Dates are important, please. On 1/4/2012, ABC Mutual Fund issued 20 lakh units of 10 per unit. You can tell me 20 lakh into 10. Amount collected how much? 2 crores, 200 lakhs basically. I'm putting it here. You can just, if you want, you can put in rough paper so that we can tally our numbers at the end. Relevant initial expenses involved were 12 lakhs. So mutual fund incurred some expenses minus 12. Balance comes 198. It invested the funds so raised in the capital market instrument to build a portfolio of 185. It's basically inflow and outflow. I'm doing nothing else. Out of 200 lakh, 12 lakh were spent on the initial expenses minus 185 lakh. So in hand opening cash balance, that's called opening cash balance. How much comes? 3 lakhs. Since we are standing on 1/4 and I have to go on 34, I'll be finding a closing. So my objective is finding a closing cash balance now. And I'll keep writing the gain losses separately. So till here I come to know out of 200 lakh, 12 lakh were spent, 185 lakh was built up the portfolio. So my cash balance is 3 lakh. During the month of April 2012, it disposed of some of the instrument costing 60 lakh for 63 lakh. How much inflow? 63 lakh inflow. And in somewhere else I'm writing capital gain is equal to 3 lakh. That I'm writing separately. Use the proceeds in purchasing securities for how much? 56. Inflow, outflow, outflow minus 56 lakhs. Fund management expenses for the month of April, relevant month is April, was 8 lakh, of which 10% was in arrears. Cash outflow how much? 7.2 lakh, and I'm writing here outstanding expenses are 0.8 lakhs. In April 2012, area of a mistake is this, I think. The fund earned, this is mutual fund earning a dividend amounting to 2 lakh. Inflow, outflow, inflow plus 2 lakh dividend. And it distributed 80% of the realized earnings. It distributed 80% of the realized earnings. That means whatever I'm a mutual fund, I earned from the industry 2 lakh rupees. Out of that, I've distributed how much? 80%. So 80% distribution will be 2 lakh into 80%. No, 80% of the realized. This is the area of mistake. 80% of the realized earning. Now look up here, please. Dividend, how much mutual fund earn? 2 lakh. This is called realized earning. The realized earning of the mutual fund is capital gain plus dividend both. It's a capital gain plus dividend both. 80% of it would be equal to how much? 4 lakh. It's a minus 4 lakh. This is the area of a mistake. This is the area of mistake. I'm saying it again, please. He said, look at the line. It distributed 80% of the realized earning. Dividend is not the only realized earning. It's what I've earned is basically the capital gain plus dividend distribution. Both has been earned. So capital gain and dividend distribution out of that 80% minus this. Another point which comes, sir, the balance 1 lakh is where? That should not have a doubt, especially being a student of accountancy, you should not have a doubt. When I earned capital gain, you know where I showed 63 lakh here. This includes how much? 3 lakh gain. And when I earned dividend, I included what? 2 lakh. That means my cash balance increased by how much? 5 lakh. And I'm paying how much? 4. That means 1 lakh is still part of the cash. 1 lakh is still part of the cash. Do not have the doubt that where 1 lakh went, where 1 lakh has not gone. It's only one thing. You have given me 100 rupees. You're asking me, sir, 10% interest. I say, I'll give you 7 rupees interest. The moment I pay back 7, your balance outstanding with me is 103. Exactly same thing. I, as a mutual fund, when I invested on your behalf, I earned 3 lakh here, 2 lakh here, distributed how much? 4 lakh. Now, what is my cash balance? 0.8 lakh. Sir, under what circumstances we have to do this working? Whenever you are giving opening cash balance, you will have to make calculation of the cash balance. That's the major work. So 0.8 lakhs comes as this cash balance. Now moving forward, on 34 2012, that's exactly a month. Market value of portfolio was 198 lakh. That's basically your market value of the portfolio, 198 lakh. Mr. Akash, an investor, subscribed for 100 units on 1 for 2012, disposed of the same at closing NAV of 34 2012. Basically 100 units are 100, so it does not make me difference. I can calculate. Basically I have to calculate his return. Also another area of a mistake student make is he is asking annual earning rate. The data is given only 1 month. Data is 1 month, so whatever return you will get, it will be a 1 month. You'll have to convert in 1 year. We are not going into any kind of a debate, sir. Effectively, should we raise to the power 12, etc. Nothing will do. Simply 1 month is there. What your institute has been generally following is simply 1 month. 12 month is into 12 by 1. If it's 3 months, we convert in 12 yearly. It's a 12 by 3. That's it. Nothing else. So my closing balance would be 198. It's asset value 198 plus cash balance how much? 198.8. And there were some outstanding expenses which we had because of the 8 lakh 10% were in arrears, 0.8. So my total NAV which comes out is 198. And how many units I have? 20 lakh. Do not worry about the 100 units. It is immaterial how many units he is holding. We're just calculating closing NAV basically. So 198 divide by 20 lakh. My closing NAV is 9.9. Now this is his closing NAV. I know my opening NAV was 10. Now what I want to calculate is this 4 lakh has been distributed. Now 4 lakh has been distributed. I want to calculate per unit return. There will be different ways of calculating. If you are falling short of time, simply 4 lakh divided by 20 lakh, you'll get per unit return. If you think the marks are not justified by this shortcut, then perfect ways. Capital gain total 3 lakh. Capital gain total is 3 lakh. Out of that distributed is how much? 80 percentage, which becomes what? 2.4. This is total divided by 20 lakh. This is per unit. How much do we get? 0.12. And dividend, if I calculate, total was 2 lakh into what? 80 percentage, 1.6 lakh divided by what? 20 lakh. How much do we get? 0.08. Now I can know my return formula is nothing but, sir, dividend distribution plus capital gain distribution. This is NAV1 minus NAV0 was what? 10. So it's a 0.08 plus 0.12 plus 9.9 minus 10 divided by 10. You get a return. How much you get? Return is, sir, point dividend distribution plus capital gain distribution plus closing NAV minus opening NAV divided by opening NAV into 100. And remember, this is 1% per month. And his line was very clear. Annual rate of return. Annual rate of return would be equal to 1% into 12 by 1. How much? 12% per annum. 12% per annum. I'll show you the format. Don't worry, this is a rough work. Still, we are taking a lot of time at home when you're practicing. The question should not take 2 minutes, more than 2 minutes. Just have to roughly do the numbers. and highlight a point which is a new in this. For example, in this, if I would have made a mistake or if I would have expected you to make a mistake was two areas. One was you will make a generally what we when we take the test and when we look at the answers of the test, the realized earning they take only dividend. That's one area of mistake. Second is annual rate of earning. They end up the answer as the only the month earning. That's two area for mistake. Rest of them generally do not make a mistake. If I show you the answer on slide number 8, no, this is question number 27, 6th slide I have. Quickly go through it, please. Take 2 minutes time. I'll give a rest to note. Read from this way. Writing is eligible, I think. Means writing is readable. Because it's been almost 14 years for my marriage, I think. 13. So I do not have to write any love letters now. Not habitual of writing. But in your case, after becoming CA, you have to be careful about your writing. Even though you're part of the WhatsApp world, writing letters is always good. After becoming CA, Nalaik, read this. Nalaik is a love language if by chance some of you are new. It's a Nalaik is not Nalaik. Nalaik, you know what is Nalaik? No, some of you will go back home. Sir, useless fellow. Nalaik is not useless fellow. Nalaik is love language from my side. If you're Nalaik, I'm Mahanalaik. How do I? You understand? So don't go back home, Nalaik, and say it's a useless fellow you called me in the class. A very, very important question. I think 2 or 3 times have come in the exam. 10 marks. They'll only change the numbers. Quickly go through it. This chapter you cannot expect to lose marks out, irrespective of how complicated this is given. This chapter we cannot expect to lose out the marks, please. One of the scoring chapters we have. If there is a lengthy question also, it might take some time. I'll show you some of the lengthy questions which come in exam. If by chance lengthy question comes, then you have to take a call. At what point of a time you have to attempt that question. But generally we have not seen except maybe one odd level which I'll discuss in the class that question. A student would have faltered in the exam when it came out. Now moving forward, one return formula we have seen. Now I'm on the next slide. You do not switch over till the time I tell you. I bought Reliance share. Any discussion we do in the class with respect to share is only for educational purpose. I might hold, my family might hold for my reference purpose, but I'll discuss only for education. No investment advice or no sell advice will be there. By chance, because I'll be taking a lot of names of the shares during the flow of the class. Let's suppose I hold Reliance shares 100. I bought at 900. The price became 1500. What is my return? 66.67. No doubt. Very good. Look at the second example. This was the first example. You do not switch over your notes, please. Look up. I bought 100 Reliance, same 900. Bonus came 1 is to 1. So 200 at the end, price became 1100. Tell me the return. Calculate the return. 900 rupees becomes 1100. And make a mistake, I'm saying it again, do not worry. Make a mistake, and if you make a mistake, it's a 99% surety you will not do the mistake in the exam. If you're doing correctly, it's fine. How much return do we get? How much percent? 140. Someone was getting 40% also now, right? Any other return? Please make sure whenever you have, look at this data. Whenever you have opening and closing number same, you can calculate per unit return. When the opening number is not same as the closing, you cannot calculate the return. What you can calculate is the total amount of investment was 90. Closing value 1100 into 200 became what? 2,20,000. My return would be 220 minus 90 divided by 90. Generally in a flow we make a mistake. Now in return, second formula which comes, if you look at the slide here, it's on slide number 8 I am on. If I look at the return, opening units equal to closing units. Opening closing is same, I can calculate dividend plus capital gain distribution NAV1 minus NAV0 divided by NAV0. Return can be calculated on per unit basis or total. I can even do the total amount invested, closing value. But if opening and closing are not same, they will not be same in the question under a circumstances where your dividend and capital gain would be reinvested in the business. So when return can be calculated only on total, sir, what do you mean by total basis? Total basis would mean that I invested 90,000, at the end value becomes what? 2,20,000. So I can only apply a formula is a closing value minus opening value divided by what? Opening value. Reinvestment of dividend and capital gain will take place. That's the reason when you have to return formula, he'll give you independently. When he gives a data of, let's suppose, more than 1 year, or he gives you different dates in a question, that means the reinvestment of the dividend and capital gain would be there. That will be there. So closing value, how do I calculate closing value, sir? It's a closing unit into the closing price. Opening value would be opening unit into the opening price that comes out. Let me look at the question now. We had done 27th. One of the question which has recently also come, it's an easier question, 7th question. Read out once quickly. 7th question. Question number 7. Let me read out. Again, 6 to 8 marks questions will come for. It says, a mutual fund having 300 units has shown NAV of 8.75 and 9.45 at the beginning and at the end of the year respectively. The mutual fund has given two options. Pay 0.75 per unit as dividend and 0.60 per unit as capital gain. That's a normal question, payment. Or second part is, or these distributions are to be reinvested at average NAV of 8.65. Second part he says is, whatever you will get as a dividend or a capital gain would be reinvested at this rate. What difference it would make in terms of a return available and which option is preferable? Now don't switch over your pages, please look up. First part will do. Your opening NAV is what? 8.7. Closing NAV 9 point this you get as a dividend, this you get capital gain, and keep talking this way only. Dividend distribution plus capital gain distribution plus NAV1 minus NAV0 by NAV0. Calculate the first part answer. It's at 0.75 plus zero point 0.6 plus 0.94 9.45 minus 8.75 divided by 8.75. How much do we get? 20 23.43. Now look up please. We do not have to remember any kind of a format. The way we talk, I'll create a format. For example, second part, what is happening? I'm a mutual fund. I was supposed to give you something in the form of dividend and capital gain. Now I'm saying instead of giving that amount, I'll issue you new securities. Units can be in decimals. If you have time and possibly calculations are easier, then take units in two decimals. Now in this case, you will be getting 0.75 and 0.60. Tell me the, I'll just briefly put down the numbers. How much is the total per unit return? 1.35. How many units you have? 300 into 300. This is the amount you expect. 405. Now he says either you take from me the cash 405. That was part 1. In part 2 he says I'll give you new units at what rate? 8.65. And we are not debating, sir, why he is giving at 8.65 when the price is 9.45. That you do after becoming CA. So 405 divided by 8.65. I'll be issuing new units. 46.82. How many opening units you have? 300. If I add 300, this becomes 346.82. Closing units. I have now closing value, NAV and closing units. Can you tell me the closing value? 346.82 into 9.45. How much? 32.45. Opening value. Opening is, sir, 8.75 into 300. 2625. Now closing minus opening by opening would be my return. Let me tell you the flow once again. I was supposed to give you 0.75 as a capital gain, 0.75 as dividend, zero point 0.6 as a capital gain. Total amount per unit was 1.35 into 300 units, that's 405. Instead of giving you amount 405, I said I'll issue you units at the rate 8.65. Additional units are 46.82 plus the opening units 300, closing units would be 346.82. 346.82 into closing price will give me closing value. Opening units into opening price will give me opening value. Closing minus opening divided by opening is my return. How much we will get? Return 3277.45 minus 2625 divided by 2625. 24.85. Second option was had to come better off. You should know something logically also. Reason being, which you are getting 405, you are issued units at a very cheaper rate, 8.65. So it had to come better off. What will come, I don't know, but this has to come better off because the closing value is 9.45, whereas you're getting units at what? 8.65. That's again has come in number of times in the exam. This question. Now we can see the answer. Question number 7. Opening not equal to closing. Opening units not equal to closing units. Quickly check the answer, please. Distribution of dividend, capital gain, return formula 23.43, reinvestment dividend and capital gains. Done. So question number 7. And decision also, please do write in the exam. Decision carries a number. It is better to go for reinvestment option. Please do write the decision in the exam. Let me go back now. Another question which has come, I think, 3-4 times in the exam. Question number 6. This question came first time in the exam. There was a language problem. Next time onwards, they improved some language. So I've taken the question which had some issue with the language only. Look at the question, please. Question number 6. It says Mr. X on 1/7/2000 during the initial offer of some mutual fund invested 10,000 units having face value of 10 for each unit. First date is 1/7/2000. On 31/3/2001, dividend operated by the mutual fund was 10% each, and Mr. X found that his annualized yield, highlight that word please, annualized yield, whereas the period is only from 1/7/2000 till 31st March 2001. It's a 9-month period, and he was annualized yield was 153.33. Actually, what would have happened was between 1/7/2000 and 31st March 2001, there would have been some dividend, and he would have calculated his return. When he converted that return into a full year return, that became 153.33. Actually, if I try to look at the period from 9 months return would be, if full year is 153.33, the 9 months proportionally would be 120, 115, 115. So 9 months return would come 115. I'll see it separately. Second date comes on 31/12/2002. 20% dividend was given on, then it's a full stop. On 31/3/2003, Mr. X redeemed, that's very important line, Mr. X redeemed all his balance units of 11,296.11 units when his annualized yield was 73.52. What are the NAVs on 31st March 1, 31/12/2002 and 31/12/2003? That's the language which is asking. And he redeemed how many units? 11,296.11. If diagrammatically I try to visualize, you keep this data open with you please. So data is basically, dates are 3, 1/7, then 31st March 2001, 31/12/2002, then third is the 31st March 2003, opening NAV 10, opening units 10,000. The first annualized return of the 9 months, means 9 months when annualized, was 153.33. The last annualized is 73.52, and redemption of units is 11,296.11. It's your choice. If you are not habitual of the line charts, it's okay. I have a habit of making line charts. It makes my life easier. If I try to look at this data, do not look at, you just look at the figures first. Let's try to read the figures what we had. These are the figures which will available if I put out. It says on 1/7/2000, when the question started, units were 10,000, NAV was 10, amount was 1 lakh. Then second date is 31/3/2001, dividend rate 10, dividend per unit has given these figures 153.33. Then on 31/12/2002, I think he gave dividend rate what, 20, dividend per unit would be 2, and on 31/3 he gave 11,296 point, and this was given. These are the figures given. These are exactly question I have put this data. When I do in the class, I put this data so that I don't have to go back to the question now again. I can make my question from here. Now, if I try to analyze fully, it becomes difficult. Let me do step by step. First, I bifurcate is this first 9 months. This 9 months I am standing. One thing should be clear, inbuilt assumption from the question, that if opening units were 10,000, at the end becomes 11,296.11, that means during the years the dividend would have been reinvested. That's clear cut. Now let me stand here and we finalize the data between these two dates. Now since from here to here the units will only change after this point, that means till that point units were same, I can apply my return normal formula. Although I can make mathematically difficult exercise also, but since your institute has kept same and it's justified enough that between these 9 months dividend whatever came on the last day would have been reinvested after that. So we are not disturbing our normal return formula because my formula would change only when my opening and closing units not are same. And looking at this data, we'll finish off the full question now. Stand on 31st March 2000. Annualized return is how much? 153.33. Actually, what would have happened? He would have calculated return of a 9 months. Then he would have converted that into 12 months. And how did he convert? Return of 9 months into 12 by 9 is equal to 153.33. Let's reverse calculate the 9 months return. So 9 months you calculated for me 115. Return formula is nothing but dividend. Since capital gain is not there, I'll put the formula dividend plus NAV1 minus NAV0 divided by NAV0. I know my return is how much? 115. The dividend would have been 1. Maybe it did not come as a cash, that was reinvested, but I got the return in the form of dividend as 1 plus NAV1 I do not know. 0 I invested what? 10. Divide by 10. Can I reverse calculate my NAV1? Calculate how much it comes? 20 point. If you calculate, sir, best way to calculate please to avoid some mistakes wherever possible. For example, if you have 115 divided by 100, you can make it 1.15. Then 10 would come here, 10, and then plus 10 minus 1. NAV1 would come 20.50. That's my first NAV. Now let me work out further. That NAV came 20.50. I know if 1 rupee dividend was supposed to come here, how many units I had? 10,000. So 10,000 into 1, I would have got how many units? 10,000 rupees. 10,000 rupees would be reinvested at the rate of 20.50. So 10,000 divided by 20.50, how many additional units would come? 487.8. I'll keep my answer in 2 decimal because the closing answer is in 2 decimals. So additional units would have come, sir, if from this to this period, this dividend when I would have got as in the form of units, whatever amount of a dividend divide by the NAV of that day 20.5, I should get 487.8. My opening units were how many? 10,000. Opening units were 10,000 and additional were 487.8. That means when I closed my accounts here, my units were 0.80. First part is done. I'll see the answer. Do not look at anywhere else, please. Now, if you look at, I'll say calculation of NAV as on 31st March, annual return 153.33, 9 months return would be 115. I put my return formula. When I put my return formula this way, I get my this part here as NAV. This part it's 20. Additional units issued on 31 2001. It's 10,000. Units were 487 plus opening units. I got this part here. Till here it's okay. Now look up please. The most important part of this question, which will trouble you 100%. I'm standing at the end of 31st March 2001. Units are what? This. After that, only one event has taken place here. After that, only one event. And I know after this event, my units increased to what? 11,296. It means between 31st March 2001 and 31st March 2003, only once dividend were reinvested, and when that dividend was reinvested, that gave me additional units as would be difference of 11,296.11 and 10,487.8. How much difference? 808.31. Sir, how do I calculate additional units? Additional units are amount of dividend divided by what? NAV of that date. Now I can calculate my amount of dividend. Amount of dividend is 2 rupees per unit, and these are my units. So dividend would have been 10,487.8 into 2, 20,000 something. 975. I mean 20,000 something would come. That amount divided by NAV of that date would give me units as what? 808.11. Can I reverse calculate NAV? Yes. So if you look at what I have done is I have done exactly same calculation. This into these two will give me these units dividend, and these units when converted at a rate have given me a difference of these two. So how do I put here? That's basically the way of language is calculation of NAV as on 31/12/2002, dividend rate 20%, dividend per unit 2, total dividend 20, 976.976, additional units issued on 31/12/2002. That means difference of 3 and 1. These are the units, and amount divided by these units will give me what? NAV 25.95. Now let us go back and read the third part again. If you try to read, the third part said Mr. X redeemed, I think his language is Mr. X redeemed all his balance units of 11,296.11 units when he realized his annualized yield was 73.52. It's full stop after that? Yes. Let me show you language of some other question which is not in your book, not part of your book. Mutual. And let me show you the language only. It's not that we are covering. Let me show you something else. When this came in the RTP and the exam, the languages were. This is not part of your book, don't worry. I'm just showing you the language. It's exactly same question. You don't flip over. It's not there in your book. It's only to show you something. This was actually asked in, I think, 2006. I have taken that question as it is. This was asked in 2006. So I have taken the original question. After that, the language is modified. I did not modify it for a certain reason because I have a full trust on your institute. They'll repeat the same language of 2006 at one point of a time. Modified language they give, it's okay. Unmodified they'll assume students should know. So I have taken that language only. After that, whenever language came, the language was this. Look at this language now. 1/7 2005, then 31/7 140% dividend, etc. Blah blah blah. Last line I'm reading. Mr. X redeemed all his balance of this units when his annualized yield was 75.45 over the period of his holding. In your question, I think that language is missing. Over the period of his holding. The only question he says is Mr. X redeemed all his balance units of 11,296.11 units when he realized his annualized yield was 73.52. Now, two type of opinions can come in this kind of a language. The opinions which can come is the two types of opinions can come in this kind of a language. The opinions are basically, if I go back to my line chart again, try to beautify the opinions which can be there and which are valid only for 2006 question but not subsequent. That could be this return is an annual return, no doubt. This return is annual return. Now, did he calculate a 3 months return and then convert it into 12 months, or he calculated the entire from here to here 33 months and then converted into 12 months? Understand the flow, please. First, I'm saying the annualized return is 12-month return. If he uses over the period of his holding, then you do not have a choice. That means he calculated this return and then annualized. In this particular language, you have both the choices. By chance, if you find alternative answer, ignore that answer because some books or some authors might write the 3 months was annualized. If we have to give the assumption in the exam, in this question, I would suggest give the assumption in the absence of any specific information given in the question. We have assumed that this annualized return of 73.52 is over the period of his holding. Sir, what does it mean? It means he calculated the 33 months return and then converted that 33 months return into what? 12 months return. Now let us calculate how he would have done. Now in my case, opening and closing units are not same. Opening and closing are not same. If 73.52 is my 12 months return, what is my 33 months return? If 73.52 is my 12 months return, what is my 33 months return? 202.18. 202.18. Opening value, how much is your opening value? 1 lakh. If opening value is 1 lakh and you get return of 202.18, what is your closing value? You invested 1 lakh and return is 202.18. What is the closing value? 99% in the normal classes student makes a mistake, and I think 50% in this class also will make a mistake. That mistake is common. It's not that you are making a mistake because you do not know mathematics. It's a common mistake. 202.18 is a return. Return is principal plus return. 1 lakh is principal. It's 1 lakh plus 202.18. The value will not be 202.180. The value would be 302.180. Closing value I'm asking. Opening value plus return. Opening value is my 1 lakh and plus 202.18 is my return. My closing value would be 1 lakh plus 202.18. That means my closing value would be 302.180. If my closing value is 302.180, let me figure out how did I calculate my closing value. My closing value would have been closing units into closing price. Closing units into closing price. I know my closing value. I know my closing units. Can I reverse calculate my closing price? Yes. How much do we get? 26 points. Now look at this. And at least I have a habit of writing everything, since I've taken the help of slides, because it was very difficult in your class to dictate these sentences right, so that you know when you're writing the answer in the exam, give the utmost clarity whichever is possible. So I've written it accordingly. Since question was silent, calculation of NAV on 31/3/2003 assuming annualized yield of 73.52 over the period of his holding. That means we have assumed he calculated 33 months and then he had done 12 months. This data we are using. Return for 33 months would be 73.52. For 12 months, 33 months would be 202.18. Investment was done on what date? 1/7/2000. This is 1 lakh plus return of 202.18. Total amount we get is what? 302.180. Units are 11. I can calculate my NAV. Look at this. A very important question from the examination point. Quickly look at the answer. First part was straightforward. Second part was mathematical. Third part was assumption. Quickly check the answer, please. Quickly check out the answer. Just numbers you check it out. Rest is okay. Now before I take up the next question, I'll have to discuss with you few ratios. Quickly I'll discuss out those ratios, which comes in the mutual fund also, which will come back in the portfolio also. There are something called performance evaluation ratios. Two ratios, in fact three are very important. Let me discuss two only here. These are called performance evaluation ratio. One is Sharpe ratio. Second is Trainer ratio. One is Sharpe and second is Trainer ratio. Sharpe ratio formula is, anyone who can tell me, it's RP minus RF divided by standard deviation of portfolio. Standard deviation represents the total risk. This was RP minus RF by beta. If you know that, that's perfectly fine. If you want to write, you can copy that. I'll see the next question. Another very interesting question set by the institute. RP minus RF. This ratio will come back in, I think, portfolio back again, and there will be third trainer ratio also come back. RP minus RF divided by standard deviation, RP minus RF by beta. Three ratios. Actually, there are five ratios which are used. Let me show you some. If you want, let me see if I have a better working than this. Let me give me a second time. Just give me a moment, please. I think I would have. In fact, you can copy these three only. These are the three ratios which I'll be using. I'll just show you. Performance evaluation ratios. I just need a formula from you. If someone is comfortable, it's okay. Someone is not, that's fine. There are actually five formulas, I think. Three formulas we use for the portfolio in this chapter. It's Sharp ratio. It's RP minus RF by standard deviation of portfolio. Trainer is RP minus RF by beta, and Jensen's alpha. Jensen's alpha I'll not touch in this chapter. Yes, I'll touch in the portfolio because that will require me some calculations there. RP is return of a portfolio. RF is risk-free rate of return, standard deviation of a portfolio. B stands for beta. How do we read, sir? This part here. The way of reading is RP minus RF is nothing but excess return, and the entire formula is excess return per unit of total risk with respect to total risk, and beta represents a systematic risk. So we have excess return per unit of systematic risk. So it's basically a beta. Trainer, I think, was a student of a Sharp, so he asked what ratio I should use. You already used total risk. He said you use the beta. So he used a beta. I'll just take a small example so that you become comfortable with the numbers. Do not copy, no need to. And this is also known as a reward to variability, the another name for the Sharp ratio. The way of reading the formula is, actually you should know how to read the formula. Formula creation is okay. Whenever you have a return in the numerator, it will always be higher the better. It will always be higher the better. For example, if I have a and B, return of portfolio 15 and 20, and prima facie what appears is, if I show you only this data, if I only show you RP and RF, this data RP and RF, you'll appear that this company is doing better. It is but obvious higher return would come a higher risk. If nothing is said, it's okay, higher return is possibility. In portfolio, I'll show you something else also when we do efficient frontier. So there we'll slightly look at efficiency theory and so on. That's a separate topic altogether. In this case, if you look at excess return, A gets is 5% over risk free, B gets what? 10%. When I divide it by the standard deviation, I get 1.25 and 1.11. The way of reading it becomes as excess return per unit of total risk. Simple way of language is, if I leave any kind of a percentage etc, I say I earn 5 by taking risk of 4, I earn 10 extra by taking risk of 9. That's way of reading. So what is better off if I have to select any one of them? So way of reading is excess return per unit of total risk, higher the better. Excess return of 1.25 per unit of total risk, A is better. Similarly, instead of using a standard deviation, the trainer used beta. Beta is a measure of volatility, hence they call it as a reward to volatility also. When you go back, please, it's advised, open up your books, you'll find this term. It's not something very new, reward to volatility. In this case, also remember one thing, when I calculate the ratio, which will portfolio will become very important from this perspective. If you look at the Sharp ratio, standard deviation does not have its own unit. It changes the color like a chameleon, what you call it as? Girgit in the English. You Bhavna understood na feeling. So this is in percentage, this is in percentage, percentage gets cancelled. In the beta is a normal, so it comes 6. Bhavna, no, Bhavna, nalai. Bhavna is feeling. Bhavna is feeling. What was I telling you? Percentage? Bhavna's confused a lot. I was telling you, portfolio will be very important because I'll show you some mistakes which you commonly make, which you should be avoiding. The data of the standard deviation does not have any of its data. If the data on which you calculate, if the data is in percentage, answer of standard deviation comes in percentage. If you have rupees, answer will come in rupees. So percentage gets cancelled, you get 1.25. In case you use beta, the way of writing becomes something else. It becomes 6 percentage. So sharp ratio will not come in percentage, but this will come in percentage. Sir, why are you focusing on this? I think this attempt or previous attempt, one of the questions came by the institute. He gave the question in the points, 0.0714 trainer or a sharp ratio. I'll just show you because, and remember me because I'm showing you so that you can remind me when I'm discussing that there. It came in portfolio. Just give me a moment time, I'll show you. Actually, some questions institute when they set na, they set in such a way, actually the question will come in portfolio. You should know whether we are looking the data from the percentage perspective or we are looking the data from the normal perspective. Question which came, yes, this is the question. If you, this I'll cover up with you, don't worry, in the portfolio chapter. So data when it came na, it came for example 0.0174. Can you see that? So you should be very, trainer ratio I'm talking about. So you should be comfortable when you are converting them. It would be converted to what, 7.14. Because this problem when came, some of the student made a mistake because they were not able to analyze the data properly. So the comfortable net should be there. If you have a percentage, let's suppose, and divide by percentage, so percentage gets cancelled. If you have a numerator as a percentage, but in denominator there is no percentage. If you look at beta is not in percentage, I hope you know how to read beta. How do you read beta of 2? Beta of 2 is 2. Beta of 2 is 2. Nalai. How do you read 2? Market changes by 10 percentage. It's basically based on the correlation. Market changes by 10, I'll change by 20. That's a beta. So beta is 2, it comes in percentage here. So sharp ratio trend. Second important part is, one is this. The next important part is the sharp ratio is based on what parameter? Total risk. Or total risk is basically, there is something called systematic and unsystematic. Beta is based on what? Systematic. Now I think MCQ wise, because MCQ I'll try whatever best I can do. In case not, then slightly I'll keep discussing what he can make. He can give you MCQ which would be very common. He'll say sharp and trainer ratio will give the same ranking when there is very low or no unsystematic risk. Understand why? Total have systematic plus unsystematic. Beta has what? Systematic. If I remove the unsystematic, both would have what? Similar ranking. If the ranking is not same, that means there is a presence of unsystematic risk. So just remember the formula from the calculation perspective. We say calculation perspective, we call it as trainer ratio was, this is the formula where we were, this was basically RP minus RF, excess return per unit of total risk. This is excess return per unit of systematic risk. Now let me see the question which can be framed from the mutual fund perspective. I'll go back to the question. If I go back, this question has come twice in the exam now, 28. 28th question. A very important question, and these type of questions are still better off. They do not check your lot of mathematics also, they do not check lot of your working also, and still are able to impart marks. He says there are two mutual funds, D mutual fund and K mutual fund. Full stop. Each having close-ended equity scheme. Close-ended as entry exit is not allowed. There is something called open-ended, in which entry exit is open. You can buy in time, you can sell in time. Closes, the offer opens, closes, then exit is almost after 5 years, and they are listed on the exchange. So you cannot buy from the mutual fund. The funds would be closed for the entry. NAV on 31/12/2014, a very important date. 31/12/2014. Equity scheme of D mutual fund was 70.71. We'll focus only on D, because K I'll ask you to do on your own. Consists of 99% equity and remaining cash balance. K mutual fund is 62.5, consisting 96% equity, balance in cash. Just keep a focus on the D 70.71, and then following other information is available. Equity schemes D I am reading. He has given Sharpe ratio, he has given trend ratio. Although he has not mentioned anything, don't worry. It's in Sharpe ratio, trend ratio 15 would be a percentage or so. Automatically it comes out. Nothing to worry. 15, and then standard deviation is 11.25. There is no change in the portfolios during the next month, and the average annual, highlight that, average annual means full year cost is 3 per unit for the scheme of both the mutual funds. If the share market goes down by 5, okay, beta concept has come automatically. Very good, sir. Excellent. If the share market is stock market, goes down by 5% within a month, calculate the expected NAV after a month. After a month, for both the schemes of mutual fund, for calculation, consider 12 months in a year and ignore number of days for a particular month. What he's trying to ask you is, he's standing at 70.71 NAV. He wants you to calculate the NAV at the end of 1 month, and he has given you some data that within that month no entry exit has happened. Full year costing of the expenses of the mutual fund is 3 rupees, and market has gone down by 5%. Now what we have to do is let's focus on the data. Just keep helping me out. D I am picking up D. How much is opening value? 70.71. Let me divide into the equity portion and cash portion. Equity portion is 99%. No, 99%. Achha, amount is 70. Oh, old age effect. 70. 70.71. This is 0.71. Now, annual cost is 3. That means 1 month cost in cash will come. If 3 is for full year, divide by 12. 0.25. How much do we get? 0.71 minus 0.25? 0.46. This is freeze down. Now since market has gone down, equity value will go down. Now I just told you, if by chance it clicked that we spoke about beta, beta shows a relationship between a movement in the market and movement in the stock or a portfolio. If the market has gone down by 5%, I need to calculate how much I went down by, but I don't know unless until I know the beta. Now what I'll do is, if I know the Sharpe ratio, tell me the Sharpe ratio formula, RP RF divided by standard deviation. Do we know Sharpe ratio 2? I'll use different color pen, green. 2, and I know 11.25. Can I calculate RP minus RF? How much comes? Sir, if I know this as 11.25, if I know this as 2, multiply, I'll get 11.25 into 2. How much? 22.25. In the trainer ratio, RP minus RF is same, beta, and I know this is 15. If I know RP minus RF, that came how much? 20? 2 point this, and this is 15. Can you calculate beta? 1.5. Sir, how do we read 1.5? The reading of 1.5 is, if the market changes by 1%, I'll change by 1.5. If the market, positive beta we are talking about, if the market goes down, falls by 5%, I'll fall by 7.5. So my equity value 70 minus 7.5. Equity value 70 minus 7.5. 64.7. This is the value only you're telling me. This is the closing value. That means my closing value would be 64.75 equity plus this. My value would come as what? 65.21. Understand the flow, please. He has asked you the, now he has checked your Sharpe ratio, trainer ratio, beta concept plus mutual fund concept. He gave you the opening value, divide in equity and cash. Once you divide in equity and cash, subtract the expense of the cash, you get the cash balance. From the equity, what you do is, you have to find a relationship of market and the portfolio by calculating beta. Beta calculation will be calculated by trainer ratio. For trainer ratio, I need RP minus RF. So I use my Sharpe ratio to calculate RP minus RF, substituted that value in the trainer. I calculated beta, beta came 1.5. 1.5 reading is if the market changes by 1%, I'll change by 1.5. When the market fallen down by 5%, I'll fall by 7.5. So my equity value 70 became what? 64.75. So my closing value came 64.75 plus what? 0.46. Let me show you the first and then you'll do K on your own, please. This was question number 28. Also in the slides, anything which is under the clouds is a bhavna, please. Do not write in the exam. That's only for understanding. Bhavna is a myth. But if you try to follow bhavna, you'll become CA. Instead of bhavna, some other person will come. Treat him as a bhavna only, nalayak. This is important. D mutual fund. This is on slide number, sir, 11. Existing NAV 70.71, equity portion 70, cash portion 0.71, average cost 3.25, cash balance 0.46. That's freezed. Using Sharpe ratio, I calculate RP minus RF. Using Trainer ratio, I calculate beta. Then I have written the meaning of beta. And then I have written if the market decreases. In exam, please do not use these signs decreases. Write complete. I have written it. Shortcut. If the market decreases by 5, then portfolio will fall by 7.5. New equity portion would be 70 minus 7.5, 64.75. New NAV after 1 month. This comes. Try K quickly, please. Try K quickly. If you feel like taking a break, let me know. Otherwise, we'll continue. Quickly calculate K by rough numbers. K is 50. 8.9. K is 58.95. I think he divides in equity portion and cash portion. Equity portions came as 60 rupees. 2.5. Net cash balance after 1 month 2.25. Sharp ratio, you got 16.5. Using this, you calculated beta, and the equity portion came 56.7. Done. Thirtieth, I will come back. Look at 41. Actually, this question has come. This exact question has come 2 times in exam. Yes, and similar questions have been coming straightforward way maybe 5-6 times. So total 8-9 times this question would have come. This particular question is a reverse calculation. So I've taken the reverse calculation. Read once, I'll discuss with you. Read once, I'll discuss with you, please. This question came in November 20. and I think May 23, second time. Read question number 41. Straightforward question has come more than 4 5 times in exam, I think. Opening units will not be equal to closing units, and you have to reverse calculate something. In this question, opening would not be same as a closing. We'll be doing some reverse calculations. Question number 41, I'm on. It says Messrs. Corpus AMS on 1/4/2015 had floated two schemes with dividend plan and bonus plan. Mr. X, an investor, invested in both these schemes. The following details except the issue price are available. Issue price is not known. Date he has given, dividend, bonus ratio, NAV. For dividend plan and bonus plans, these are not available. Then he has given bonus is basically additional units were issued, and then ending date is 31st March 2020. Additional details. This will become my starting point maybe. The investments were given 9 lakh 20 and 10 lakh in the bonus ratio. Average profit he has given only for dividend plan. So what is these plans basically? Dividend reinvestment plan is a plan in which dividend will get reinvested. Whatever amount of dividend come, that will get reinvested at the NAV of that date. Bonuses, he'll issue you some additional units, and that will be forming part of your new units. In this case, he says, in this case, he has given average profit, and you can look at how many years you stayed invested. I think 15 till 31st March. So 15 to 16, 15, 16, 17, 18, 19, almost 5 years, I think, or 6, 5 years. And this he has given average return 6.4. You are required to calculate the issue price of both the schemes. Basically, I have no idea that what was done. I know one thing. If there was X units, I'm just doing bonus plan first because bonus is always a simpler plan. If this was X, prima facie, it might appear that I'll say it's an easy question. It was not easy when it came first time. But when it comes second and third time, since you know the flow of it, it has to be easier. First time when it came in November 20, it was a type of difficult because calculation was lengthy. I have given the answer. You'll imagine when you look at the answer, it looks easy for me because I have a own time. I can do at home no matter what I say. But it was not easy first time. Second time, yes, when it comes and when you're getting 8 to 10 marks, then you should at least you know the flow of it. Once you know the flow, then I can say it's a easier stuff. And this came in May 23 also. If you have X units and you get 1 is to 4, how many units will be here? How many additional 1 is to 4 means for sir? For every 4 you'll get 1 units. You'll get extra 1.25, total will become 1.25x. Then you get 1 is to 5. 1 is to 5 means sir for 0.25 again 1/5. So total becomes 5. So that means whatever I would uh, have units in the beginning, closing would be 1.5, and this I can do only for bonus because it's easier part for me. Now look up please. Investment was done what? 10 lakh. He has given the word average yield. Yield is a return. Is 6.4. We are talking only of the bonus. If 6.4 is average annual return, then how much return I would have got in 5 years? 30, 32. If 32% I gets a return and 10 lakh I invested, what will be my total value? 10 lakh plus 32. 13 lakh. 13 lakh 20,000. If opening was units was X, then I got some units at the end. I know I have 1.5x units. Now I also know that if I would have invested 10 lakh rupees here and 6.4 is my average annual return, in 5 year my return would have been 32. Then my 10 lakh plus 32% becomes what? 13 lakh 20,000. Now I would have, how did I get 1320, sir? I would have got whatever number of units into the unit price on that date gives me what? 13 lakh 20. Basically, how do you get 13 lakh 20? You would have whatever number of units you had closing, you multiply by what? 44 and you get what? 13 lakh 20. Can you calculate for me these X? How many? 30,000. This 30,000 means these are what units? Closing. And closing units are 1.5 times of opening. Sir, once again, 13 lakh 20,000 was, I would have closing units into 44. This my NAV will give me 13 lakh 20,000. Implies my closing units would be equal to what? 30. And I know closing unit in the X term are nothing but 1.5. So my 1.5x is equal to 30. Can I find my X? 20. It means I started with how many units? 20,000 units. And he is asking us to calculate what? Issue price. 20,000 unit I started with. And how many rupees in hand? 10 lakh. If 10 lakh was there, so 10 lakh rupees units were 20,000. Opening price was 50. Now let's see the second part answer first. No need to copy anything, please. Bonus plan. Just quickly look at the bonus plans. The way I have spoken, I have given the exact same way. It's on page 1.5. Look at the bonus plan quickly, please. Look at the bonus plan. Bonus plan is always the simplest of the plan whenever it's a straightforward question or a backward calculation. Bonus plan is always the safest of all of them which comes out. Dividend is slightly technical in nature. Before I go to the dividend, let me show you from the, because I have not taken that question here, let me show you how dividend works so that we can do the reverse calculation. We're talking about mutual fund. Let me show you how the dividend plans work so that you get comfortable, because straightforward question I have not taken, I have directly taken the reverse calculation. Now, if you look at this question here, slightly messed up, it's okay. He has generally the question which comes on the straight part is that. Look up, please. In this question, what he will say when the normal question comes, so that you get comfortable. In the normal question, what they do is they give you, for example, look at the question here. Just read from here only, nothing to copy. Dividend reinvestment plan. Amount is 5 lakh. 1 for 2001 he started. Generally, when the question normal comes, so 1 for 2001 and the rate was 42.18. Basically, what we do is we say 5 lakh divide by 42.18 will give me the units when he started with the dividend. Then on this date he said dividend, this is dividend rate. Concept of dividend rate is on the face value. Face value is given as 10. If not given, you can assume in the question as 10. So 15% dividend on 10 came. Then dividend would be what, sir? Dividend would be 10 into 15 percentage, that's 1.5 into whatever the opening units, that will be amount, divide by this rate. Then second date when it comes, whatever units you have, 20% means 2 rupees. 2 rupees into units. When the units divide by this, you get the new units. So if I show you structurally, when we do the straightforward way, can be seen like such a complicated exercise. Which question? Don't worry, this is a normal classwork, so it's hodgepodge. When we do, they understand, don't worry. Now look at this. If dividend reinvestment plan comes, generally what we do is, if dividend reinvestment plan comes, what we do is, when the slide wants a break, I think. Nalai. Look up once, please. Now, if you look at this part here, look up. When we have a dividend reinvestment plan, we say opening date, if I have these units and he will get this dividend would be reinvested at the rate of 46.55. They'll get something as a additional units. Then opening units plus these units will be the closing units. And then these will become opening of next 20% rate. So this 24747, how did it come, sir? It is 2 into 10 into 12, 236. Then divided by the NAV of that date, it comes 508, and this becomes closing. When this process comes, we get the closing units. This is a normal question which you would find when you go back home today. This is a reverse what we'll do now. So basically in the normal question what happens is, in the normal question he starts from here, and this dividend, this dividend, this dividend, this dividend, this dividend gets reinvested, and he gets some number at the end. Then accordingly he calculates. Now what are we trying to do is, in our case the question tells us is, if you look at, in the case we have, he says by chance you have to calculate the issue price, he don't know. So there would be something present here, then dividend came, reinvested, dividend came, and something happened. Now if I start from the top, it might become slightly complicated. The reverse calculation is much easier. Reverse calculation means, sir, reverse means is, he initially invested what amount? 9 lakh 20,000. The average profit is 27,748. 5 years profit would be equal to 138,743. And if he would have invested this as a zero period, 9 lakh 20,000 plus 138,743. What is the closing value? 10 lakh 58,043. Sir, how do we get this value? Closing value is always closing unit into closing NAV. Closing units into closing NAV. Closing NAV of dividend plan is what? 49. If you divide by 49, you get closing 21,607. It means after this event, now I'm using my words very carefully. After 31/3/2019, there was no dividend came. The total units closing would have been 21,607. Since face value was not given, I'm assuming 10. That means I can say, sir, if opening units before this date, if opening units before 31/3/2019 were X, if they were X, how much dividend they'll get? X is the units into point 15 percentage 0.15 into face value, I'm assuming 10. This is the amount. This is the amount. And when this amount, what we do, this is nothing but a dividend. Divide by what? 45. Divide by 45. These are nothing but additional units. How much do we get additional? Point 0.0333 something comes na? 0.0333. That means before this, if they were X units plus additional units, total will become what? 21607. Understand what I'm saying, please? If before the distribution of dividend, the the units were X, they were standing as X, then the X would receive dividend as X into the rate into the face value. That's amount. Divide by the NAV of that date will be what? Additional units. Opening plus additional will give me what? 21607. So I can get units here. I can get units here. Are you getting my point? Sir, why can't we start from the top? You'll face a problem. Because in the previous case, you were not reinvesting. Simply you were getting X dividend 0.25. In this case, you need to know the amount. Then divide by that, you need to know the closing value. Since you know closing here only, sir, how do we know closing here only? I know my closing investment is 9 lakh 20. My return is 138. Total value is 10 lakh 58 747. This I would have received when I would have sold my closing units into the closing price. So I can calculate my closing units at 21607. And this I can write, if I write in a statement form, I say before declaration, before I'm standing here, before 31/3/2019, in your book you can check that out please. If I was having X, then I received dividend as X into face value 10 into 15. That was dividend. Divide by 45, and when I add X plus this additional, my closing should become what? 21607. If you solve this, you can calculate for me the X. How much do we get? 20910. So 0.67 something. This means this 29110 was just after the declaration of how much percent dividend? 10. Similarly, can I calculate before 10? And then can I go back before 12? Understand what I'm saying? If I know my closing is after this dividend, X plus this additional unit is closing, I can reverse calculate here. Now this is basically before plus dividend closing. I can keep calculating my opening. The moment I get my opening units and I know my opening investment, I can calculate my rate. This was slightly mathematical. General question is, you know opening and you keep calculating what? Closing values. So let me show you the answer please. Then you can check it out. Look up. This was first time very mathematical. I'm saying it again. No matter how much simple I say. First time would have been difficult. Next time onwards, it should be giving you a flow. Assumption was face value 10. Dividend plan, I have 9 lakh 20. Profit per annum is 27,748.6. Holding period, how many years? 5 years. So 5 year I get as 138 743. The closing value comes 10 lakh 58 743. NAV closing was what? 49. I got this as what? 21607. And please remember, this is after declaration of the last dividend 31/3/2019. And I have given very clearly the language. Look up. Let the unit before declaration of dividend. We are standing here. X. Dividend rate 15. Dividend per unit 1.5. Total dividend 1.5x. New unit would be 1.5x divided by 45. So by opening bar X, additional and total become 21607. I can find my these units. Number of units before issue of additional units on this date. Then before this dividend was what? 12 percentage. 10. So again I have taken the same date wise. So if it was 10, if this was before was X, X plus 10 percentage divided by the unit, the NAV additional units plus this, total should be equal to what? 2910. Just look at the calculations. This came in November 20 and 2023 May, I think. Same question. Quickly check it out. Quickly check the numbers, please. You're all looking very comfortable. I'll give you one question as a test. It is not part of the question bank also, answer also. Because what happens is, whatever we do it here, we'll give you a question which is very, very different now. All of you ready? See it once again. Okay. Can we do it? Look up. Mutual fund. Your own. Question. This you can do easily. This also can be done. Oh my god. Answer is given here. What I'll do is, I'll do neat and clean, don't worry. Some cleaning exercise for you. Question number 47. You don't have the answer, don't worry, you have to do on your own only. And important point would be in this, bonus plan is there? Yes. Very good. Try out. This actually question has come 2 3 times, but when this came in May 22, they added these as two new points. Equity share appreciated by this premium of this, interim dividend and bonus share. You know what has to be done? This is same as question what you've done. Opening cash balance is given, you calculate the cash balance. Basically in this also you'll have to calculate the closing units. You have to calculate, find out the NAV per unit as on 31st December, given the operating expenses paid during the year. Now important part is, it's a new fund offer, and 121 10 lakh units of 10 each. That means you bought in some cash and you bought out some units. There was opening cash balance, then dividend received, interest were received, and since you have a dividend, interest received, and so on, after that you'll find the closing cash balance and find the NAV. First two parts are ditto copy same, I think. They're basically, in second part he says dividend was distributed. You do it on your own, I'll discuss with you, don't worry. Try as if you're a mutual fund. Calculate the NAV. Or let me help you out to some extent. Let me do some helping hand to you. At least cash balance so that you get comfort. How much money came in beginning? 100 lakh. And then what happened? 100 lakh came in. 99 lakh. How? He bought what? Hmm? Investment. What did he buy? Sir, he has bought na 80 lakh equity shares, 4 lakh this, 5 lakh this, and 10 lakh this. How much balance? 90 lakh. Opening cash balance is what? 1 lakh. Is it fine? 1 lakh. I'll help you out something. Don't worry. One part I leave it to you. I want you to make mistakes so that you know. Actually, institute has been trying something new of the late. Then we are trying to find first closing cash balance. 8 lakh dividend received will increase what? Cash balance. 1 lakh plus 8 lakh. Interest on all types of debt and securities was received. Interest is always on the face value. 5% on 4 lakh. How much? 20,000. 10% on 5 lakh. How much? 50,000. 8 percentage on 10 lakh. How much? 80,000. So you have 20,000, 50,000 and 80,000. Some amount would came. That's fine. I'll show you the figures also. Dividend plus interest. Then I have listed share were appreciated, etc. This will come as a part of NAV. Let's see. Interim dividend of 10%. You know what is interim? Dividend came basically. That's on the face value. He has given 100. 100 into 10. 10 rupees into how many shares? 25. But sir, there is a bonus share also. You know, dividend is declared when? A common mistake you'll do. Dividend is declared on 15th. Bonus share will come when? 28th. That means when you're declaring a dividend, at that time, how many shares are there? 25. Dividend will come on how many shares? 25,000. Can we have a dividend bonus plan together? Yes. A lot of companies do it. I think some of the companies are recently also doing the same thing. So that how much dividend will come? Dividend will come on the face value. If the word sometime he gives a yield, I think that comes on the market price. That we'll see in your case. Yes, we'll see in the derivatives. 25,000 into 10. How much dividend? 2.5. What is your cash balance as of now? 10 lakh plus 13 lakh. 10 lakh 10. Total balance is how much? 13. That is after taking care of this dividend, interest and this dividend. Na? That is taking with this dividend. Plus he said during the year the company paid operating expenses what? Should we adjust? If you try to compare the language I was showing you in question number 26, that was not giving opening balance, that was giving a only cash balance. In this case, you will adjust. That means 13 lakh minus 3 lakh. How much will come? 10 lakh. That means your cash balance will come as what? 10 lakh. Very good, sir. 10 lakh will come. That's done. Now, we have to calculate what, sir? NAV. For calculation of NAV, cash balance has already come 10 lakh. I have some working here. Yes, very good. Working is. Then I have to calculate the values of 1, 2, 3 and 4. Before I move forward, you help me out. How many shares I'll have? Opening shares are what? 25. Bonuses 1 is to 10. How many shares? 2,500. Total shares would be 27,500. Is that fine? Yes. Then it says equity share appreciated by 15. Now please do not make a mistake. If by chance you get the feeling also know that 100 rupees will appreciate, it is not 100 rupees will appreciate. It's 320. The 100 rupees was given for what purpose? Dividend face value. So how much 320 plus 15? 368. So 368. Very good. Equity value would be 27,500 into 368. How much do we get? 1 crore. 1 crore 1 lakh 20,000. Now I have given you hint till here. Rest part you do it, please. I have given you hint here. Rest part you do it. This question was important from the point of view. I might take like this some questions at random if I feel that the chapter is looking very easy to you. So I'll pick up the questions accordingly. Sir, how do we calculate the values of the government securities? NCD, he has given something. We'll calculate accordingly. NCD, I think he has not given, so we'll take at a cost 5 lakh. For listed debentures, he's saying 10 lakh rupees will become what? 12 lakh. That means nothing is said about this 4 lakh. This will remain at what? 4 lakh. This will remain at what? 5 lakh. This will not come at 10 lakh. This will come at what? 12 lakhs. If I let me scroll down, please. Let me scroll down to the answer only. If I try, yes. If I try to look at what we have done till now, 1 lakh was the balance opening, dividend received, this received, dividend. You said cash balance would be what? 10 lakh. 10 lakh was the cash balance, na? And 5% government securities, 4 lakh at par. 4 lakh at par. Then 5 lakh would be same as what? 5 lakh. Sir, how did we get 27,500? This was 25,000 plus bonus 368. How did we get 368? Was price was 320 plus what? 15 percentage. So we got as this, and the value came 10120. Someone has written 120,000. Debenture, sir, 120 is written because he has given the value as what? Premium of 20, listed premium of 20. This is not there in your notes, so I have to discuss from here only. 12 lakh. This I get the value. How many units I had was 10 lakh. So my NAV closing comes 13.22. This was not the problem. In second problem, generally student faces a problem is in second part. There are two different ways of doing it. Second part says this is how much NAV we got, 13.22. Just write somewhere if you want 13.22. Second part he says is find out the NAV if the mutual fund distributes 50 paisa during the year to the investor. Now understand what does it mean. I am a mutual fund, you are an investor, your NAV was 13.22. When you came to me, you expected how much rupees? 13.22. How much I distributed to you? 0. 0.5. Balance left over is what? 12.72. I can directly do it, or what you can do is you can reduce your cash balance. The moment you reduce your cash balance, your total assets will reduce. The moment you reduce total assets, automatically NAV will reduce. Third pass is asking calculate the annualized return. Return could be 13.22 minus 10 or 12.75 closing minus opening plus 50 divided by 10. You can have a distribution, dividend distribution plus NAV1 minus NAV0 by NAV0, or you can compare with 13.22. You can expect these kind of questions to be modified, especially for example interim dividend or a bonus share comes out. This was a new point which has been added in a general question. This was there. There was just a small exercise in between. I asked you to do it. Now one last part which I think from the chapter which can trouble you in the exam in this chapter is, coming back to my normal slides, there is a concept of dividend equalization reserve which I think can trouble you in the exam. Dividend equalization reserve. Now before I discuss with you, let me go back to small topic of your partnership. You've done a lot of partnership. In zero period, A and B enter into partnership, let's suppose 1:1, and they introduce some capital. Then during the period of 5 years, let's suppose they earn some earnings, and after 5 years, C, a classmate of A and B, he says I want to join, and he says since when you started you brought in 1 lakh as capital and your partnership was 1:1, let me also come as a partner of 1:1 and bring in 1 lakh. Is this what you do in the partnership? No. You know what you do? You ask, you do actually, you manually, you have a habit of calculating goodwill, etc., but you did not realize what actually you try to do. What you do is you ask him, this was our capital, then over the year we have earned some reserve, and you ask him to bring something proportionate amount of goodwill. Understand the objective of it. Let's suppose after another 5 plus 20, 25 years, they are separating. Partnership was 1:1 only. If they are separating, then at after 25 years, no one would realize that how much was earned from 5 to 20 years, how much was earned from 1 to 5 years. What they try to do is, when you do partnership of any kind of agreement, when you do, when anyone enters in between, you want that if 1 lakh was there, and let's suppose they earned 4 lakh as reserves. So basically the reserves belongs to A and B. You'll ask him at the minimum bear, bring 1 lakh as capital plus 2 lakh as what? Reserve, so that you are equivalent to everyone as of now. Understand what I'm saying? Because after this period, whatever they earn, all of them earn, although you calculate something called goodwill, etc., that's separate issue. But at least minimum where you'll ask that 1 lakh I brought in, you have to bring in 1 lakh plus up to here. Two things can be done: either A and B would distribute all the reserves amongst them, or they'll say you bring proportionate amount of reserve. Now after that you can continue, so that after 25 year, 30 year, 35 years, no matter when the dissolution happens or when they are removing or doing away with this partnership, they can distribute everything equally. So whatever they earned, whatever he brought, they were equivalent, and after this period they have all done equivalent work. This was the actual reason of a partnership, when they bring in that I have to bring in some new partner at a point, or if any partner is living in between, will take his proportionate share till that date. Now dividend equalization reserve works in the similar way. First of all, this language I do not appreciate if it comes in exam, because this language is only for the purpose of theoretical level if the question comes in. And two times I think question has come, plus there remains still some problem in the framing of the question. What does this say? Question will say what? Question will give you 1 for 2017 data will be given. He'll say on 34 2017, I'm taking numbers of 17 here, someone is coming at the April end. Generally, if someone is coming at April end, I'll calculate NAV of April end and ask him to bring proportionate share of income. But the language would be used is, new investor wants to buy some units, let's suppose 10 lakh. Calculate the issue price if mutual fund charges 2% entry load. Entry load is when you buy something on opening NAV. This is very weird language. He will ask you, you calculate this, on this you charge 2 percentage and adjust for equalization. Why does he use this languages? Because between 1 for 2017 and 30 for 2017, if any income is earned, this income does not belong to any investor who is coming on 30th April. But since question should have done what? Opening NAV plus whatever increment has happened, he should calculate the NAV on 34. But they never do it. They ask you on 34, you ask the new investor to calculate his issue price based on the opening NAV, plus ask him to bring his proportionate share of reserve. You will have to do what? I've taken a small numbers here. If opening NAV was 18, units are 100 lakh. That means any income which is earned before a new person enters in does not belong to him. It belongs to only the previous one. Let's suppose if we are the only owners, it belongs to us. If anyone is coming new, he has to bring this proportionate share. This 600 lakh income belongs to this. That means income per unit is rupees 6. If the language question will use is, new investor will issue price would be based on the opening NAV plus entry load plus equalization reserve. It means it will be 18 rupees plus 2 percentage plus this 6, that's 24.36. Sir, what will happen by bringing this? If he brings in 24.36, leave the 0.36 paisa, that's entry load, leave it. 24 is nothing but this 18 plus this 6. At 34, now he is equal to us. Let's suppose on May end, if the company distributes any income, the mutual fund will not have to have any bothering about whether that income belongs to this period or whether that income belongs to this period. If any income belongs for May, then both were eligible. If any income belongs to April month, only I was eligible. But new investor was already asked to bring what? Additional 6. So what he brought in, he will take away that. I hope you're getting my point. The objective will be very clear, that First of all, the language is not, it's actually accounting question. Again, I'm saying the language should have been whatever is the date NAV today, bring in this share. But he never says that. He stands here, he says calculate opening NAV. Then in May, he says someone who's going away will go at the rate of opening NAV. Now, someone, why would he go back at the 2 months back NAV? He will go back at 2 months back NAV plus he'll take what? Proportionate share of income of what? April and proportionate share of income of May. That has to be kept in mind. Dividend equalization reserve, if I would put on theory, it would mean that any income which arises before the new investor comes into the business has to bring his proportionate share of income. That's called dividend equalization. We are making him equal here. After that, he'll become the normal partner with that. Now let me see the question which came out. Will not look at the answer again, please. I'll ask you to do that answer verbally. This question number 30. Again, this question when first time came, it is 99% surety. You cannot try it out. There remains, and after doing this also, there will be some problems which will remain. Second, third time, it becomes very easy. Question number 3030. On 1st April, open-ended. Open-ended is anyone can come in and go out. Open-ended. Scheme of a mutual fund had 300 lakh units outstanding with 10% net assets value of 18.75. This is on 1st April. At the end of April, it issued 6 lakh unit at opening NAV. Highlight that word please, opening NAV. Plus 2% load, that's entry load. Entry load is when you enter, exit load is when you exit. I think entry load is abolished practically. I think so. When you go back home, check it out. But in exam, it is coming still now. Reason being, maybe mutual fund you're not studying only from the perspective of Indian laws. You go to some other country, they would have the AFM and there could be possibility of entry and exit load. Exit load is still there if you redeem within 1 year, I think. Entry load is abolished, I think, August 2009, if I'm not mistaken. At the end of April, issued 6 lakh unit opening NAV plus 2% load adjusted for equalization. At the end of May, 3 lakh units were repurchased. Opening NAV, again, opening NAV less. Exit is, it is as good as when you buy something, when you buy a property, you end up paying more. When you sell a property, you still pay brokerage type of a thing. The lesser amount will come in hand. Adjusted for equalization. At the end of June, 70% of its income available was distributed. In respect of April and June quarter, the following additional information are available: rupees in lakh, portfolio appreciation, then 3 months income, and then he says income available for distribution. This is which date, sir? This has to be done in the June. Issue price end of April, redemption end of May, and NAV June. Now I put this in the line chart. You do not switch over your pages, please. Stay on the question only and help me out with the line chart. We'll do verbally and then we'll look at the answer. Now look at this line chart, please. You do not have to do anything. You can just look at my chart and help me out. Figures are right or wrong. I'm standing on 1st April. I always have a habit to put the figures on line chart so that I do not make a mistake. Opening NAV 18.75, units 300 lakh. Income of April is 22.950. Income of May is what? 34.425. Income of June is what? 44 point. Then on 34, in the third line or second line, he says new units issued how many? 6 lakh. And wording C has given issued at opening NAV plus 2% load. Since he is a new investor, he'll bring his proportionate share of equalization reserve. And should be very clear if you look at this data here. You should be very clear if you look at this data here that someone who's coming in the month of April, he'll bring his proportionate share of April. Then May end, he says redemption of how many units? 3 lakh. Also one more thing, opening units were how many? 300. How many are coming at the end of April? 6. I'll get units as what? 306. May end, how many going? 3 lakh. When someone is selling, he'll sell minus the load because he'll pay the charges and plus he'll take away his income of how many months? April and May. Closing units would be 303 lakh. And then June end would be what, sir? 70% of the income available for distributed units would be what? 303 lakh. This is the data available. Now let's do some working more. Income of 22.950 should be distributed amongst how many holders? 300. So can I calculate that income becomes 0.0765. Similarly, income of May 34.425 would be distributed amongst how many unit holders, sir? 306, that 0.1125. And then after May and 3 lakh units have gone, the ending units are 303. This income would be distributed amongst how many? 303. Data is clear? Now let us pick up your calculators. Three parts he asked. First, June end calculation, income available. Second, issue price. Third, redemption price. Let me calculate second part, issue price first. Focus yourself on which date? Focus yourself on this date. This date we are standing on. Let us focus on this date now. That is 30th April. He said, question has said, in fact, question has said, you do not even have to bother what is happening. Opening price is what? 18.75 plus what? 2%. 18.75 plus 2, how much do we get? 19 point something. Plus he'll get proportionate share what? 0.0765. Add 0.0765. How much? 19.2015. This becomes my first part answer. Answers are not difficult. It's only data point. He is only saying 18.75. I'm not putting my stress. 18.75 plus 2% entry load plus what? Dividend reserve 19.2015. For my internal calculation I have just done, if 19.2015 is per unit, how many units is bringing? 6 lakh into 6 lakh into 6 lakh. How many do we get? Cash inflow I am talking just for my purpose. 1.5.2019. 1.5.20. I'm just putting in rough number. Is that done? Second event is taking place when? May. Let's go to May. Look up please. Let's go to May now. How many units are going? And he is only saying opening NAV. Opening NAV is what? 18.75 minus the exit load. How much? 0.375. And do not make a mistake. Two incomes he'll take now. 1.0 this and second is 0.1125, because if he is going at the end of May, we will take away two share of income, one of the month of April, second month of May. How much? 0.189. Total comes 18.564. Let me show you the answer. Repurchase price, and I'm not writing it NAV. This is not NAV, it's a repurchase price, because for NAV some calculation other has to be done. It's opening NAV minus what? Exit load plus equalization reserve, which month? 2 months. And I have calculated my outflow. Outflow I have calculated 3 lakh unit into 18.564. This is nothing but cash outflow. Now first part I can do now. Actually he has given wrongly. He should have given second as a first, second, and then first as a third. Third part is asking what? We have to find what? Income available for distribution. Let us stand on the June end. Do not flip over a page please. Let's start on June end. Till June end, how much income you earned? You earned 3 months income, 22.950 plus 34.425 plus 45.45. You can add all three and tell me what comes out. 3 income is 10825. This is the income you have earned. Now someone who came in the month of April, he brought his part of reserve. How many unit holder came? 6 lakh. And how much was per unit income? 0.0765. 6 lakh into 0.0765 would have increased your income by how much income he brought in? Sir, once again, someone who came in the month of April, since he brought his equivalent share of income, that's 6 lakh into 0.0765. How much income? 0.9. Sir, someone who went at the end of May took 0.189 into how many units? 3 lakh, 0.189 to 3 lakhs, 0.567. So can I say my income available for distribution would be total I earned was 22.950, 34.425, 45.45, and someone brought in new, some took away. How much left? 102.717. And how much we distributed? 70% of it. 70%. I can see this answer now. Look at this part, please. Income available for distribution 22.950, 34.425, 45.45. This is the 3 months income. Equalization reserve, new investor brought in what? 0.459. Who took away something was 0.567. And then this income would be distributed amongst how many unit holders? 303. Be careful, please. At the end of June, there were 303. And how much he said I'm distributing? 70%. So he distributed was 71.9019. Last part had some ambiguity. Let us do in the flow. Since this question has come 2 times in the exam, they have done the same thing. I'll also do the same thing. In a flow, we'll do it. He's asking last part as what? Calculate NAV 30th June. Pick up your calculators, please. Now, what we'll do? Pick up your calculators. One more data I have not written here is during this period some appreciation happened. How much? 4? 4? 7. Now let us try to look at what will happen. I have to calculate NAV at what date? 30 June. Na? What I'll do is, what is my opening value? 18.75 into 300. You just keep putting on the calculator, or you can use memory plus button. It will be 5625. Then there is an appreciation happened, 425.47. I have no idea which month how much happened, and I'm not even bothered because I have to calculate what? Closing value. 5625 plus 425.47. That happened. Then we can do is, in 3 years we earned some income. 1, 2, 3. This will increase my NAV or decrease? Increase. Add the incomes. 22.950, 34.425, 45.45. Opening value plus appreciation plus income. Sir, why have you added total? There was some inflow outflow. Just add the total. Add it. Then someone who brought in new income, I'll not only write new income, he brought in cash also, and total cash was brought as 6 lakh into 19.2015. How much he brought in? One. This was his inflow, 115.209. And then there was some outflow. Outflow happened was 3 lakh into 3 lakh into, sir, 18.564, 55.692. Any other event happened? Distribution of reserves. So let's look at the distribution of reserve. 71.9019 minus this. Opening value plus appreciation plus income plus new investor bringing in the amount, some investor taking away, and this distribution. Balance would be my closing value. So I have, it is opening value, appreciation, then I have income for the month of April, May and June, amount brought in by new investor, amount taken, distribution of income. This is my what value? Closing value. And NAV would come as what? 20 point. Now you can quickly check the answer. Quickly check out, please. and make it exactly the same way when you do it, please. Just look at this line chart and make your flow accordingly. The line chart will depict everything. It's basically you have opening value plus the appreciation plus three source of income, anything which brought in by new investor minus taken by the 3 lakh unit holder, and then minus the distribution. That will give you the closing value. And this closing value units were only 303 lakh. That will give you closing. Just look at the calculation. I expect you to be very comfortable with the calculators, please. Wherever I'll feel that we have to do numbers with hand, I'll ask you to do it. It saves my time of writing. That's it. Because otherwise, for example, in valuation, we'll have maybe 20, 25 forex also. A lot of numbers would be there. So if I start writing, it's very difficult. Only thing is, I'll make just the base work. That you have an answer ready. Answer I'll tell you when to see. That's it. You'll not see the answer till the time I tell you. Because mutual fund, security valuation, bond valuation plus NMA and business valuation should cover more than 35-40% of the weight. That's the easiest stuff also, and which will give us a flow. Then forex derivatives, portfolio, then capital budgeting, and then the smaller topics. That's the mutual fund. You can go back home today, revise entire mutual fund. Chapter flow, I'll take it. Don't assume that whatever flow has been uploaded in the site it will same flow. I'll take it accordingly. I'll take my call accordingly. And let's target the same time starting 5:45 so that by 6 sharp we are able to start. 15 minutes I give you grace. 5:45 let's plan down couple of days, and then Saturday Sunday I might borrow more time from you depending on you have the time. I have the time. I'm married with 2 children. More away from the home, more happy they, more happy I. No? Why you are smiling? You married? It appears as if you also have experience now, right? Anyhow, take care and bye bye. See you tomorrow. Take care and bye bye.